You are listening to Mining Stock Education.
I said to a couple of guys today, I met companies I know, I'm like, there's no overnight success in this business, right? You grind it out for 4, 5, 6 years, raise that hard capital, advance the projects through the difficult markets. And when you come on the other side, if you've done the right things and increase the value of the company, the market eventually recognizes you. And I think we're just entering in that, hopefully, market recognition phase.
I'm Bill Powers here at the mining event of the North in Quebec City, speaking today with Michael Gentile, strategic resource investor. Michael, it's great to see you in person.
Great to see you face to face.
So my first question I had as I was driving here, thinking about what I would ask you would be, when you're walking around here and you're meeting to people, like, who are you? Because you're an investor, which functionally turns representative of the company, but you also take directorship roles in some of the companies, and I believe even chairmanships in some of the companies. So how do you balance all of that at a conference like this?
Yes, I wear two primary hats in my professional life. So I'm a co-founder of Bastion Asset Management in Montreal, which is an institutional equities firm where I cover the commodity sector and assistant portfolio management with my partner Charles Hager and Mathieu Boisvert. So that's a kind of blue chip institutional equities, kind of 300 million to 10 billion, more cash flowing producing assets and other sectors as well, healthcare, tech, industrials, et cetera. So I'm here at a conference where you have a wide range of companies. You've got large caps and you got micro caps. So I got my hunting license on for Bastion Asset Management, meeting some of the mid cap companies that are here. There's a few of them in the mid cap space. And then my other roles, probably a little better, is my role as a strategic investor in the junior resource space with my own capital, investing in emerging resource or pre-resource stage companies in the junior resource sector. So I'm coming here, I am doing meetings looking for new names in my junior resource portfolio. I'm doing meetings looking for names in the Bastion Asset Management institutional portfolio. And you're right, I'm also doing some corporate meetings while I'm here because I'm a large shareholder and director of multiple companies in the junior resource space. So connecting my companies to capital, connecting corporate opportunities to each other and opportunities for M&A, different kind of things that are going on there. And at the same time also meeting investors and doing some advocacy or some channel work like I'm doing today in terms of just talking about my portfolio and stuff that I'm doing in the resource sector. So it's a really good use of time. It's really fun. I love doing it. And I get to do a lot of different things in a confined space, which is really fun. And it's a great layout here and really well organized conference.
Do you like one aspect of what you do more than the other?
I'm really passionate, as you know. So I love advocating for investment opportunities. And as you know, I always put my money where my mouth is. I don't do any paid promotion. I don't take any promotes in companies. I cut checks in resource companies that I believe in, and then I advocate for those projects. And as you know, for the last several years, it's been a very tough market. So it's taken a lot of heavy lifting, a lot of hard work to raise the capital and get the companies out there. Finally feels like the last kind of 3-4 weeks, the market's just percolating a little bit, starting to get some reception, some of these great stories that have been working really hard behind the scenes. I said to a couple of guys today, I met companies I know, I'm like, there's no overnight success in this business, right? You grind it out for 4, 5, 6 years, raise that hard capital, advance the projects through the difficult markets. And when you come on the other side, if you've done the right things and increase the value of the company, the market eventually recognizes you. And I think we're just entering in that, hopefully, market recognition phase. So for me, I love advocating and speaking to stuff that I love, whether it be professionally or personally. And so that's the funnest thing I do over here.
Do you ever go hostile on a company, or how do you view that in the junior mining sector?
I've said publicly before that you can't change geology, but you can change management. So when I choose between a project, if I love the geology and I love the potential of the project, I wouldn't say I go hostile, but I'll write a significant check, take a significant position in the company, and I would say strongly encourage the management and board to add the pieces to the puzzle that are missing. Some boards are not receptive, and some boards are extremely receptive. And I learned the hard way, Bill, by getting involved in companies that are not receptive, thinking that you can buy a stake in the company and make those changes. Yes, you can do it, but it's painful, it's time consuming, it takes a lot out of you. So I've learned to just sort of avoid those situations and find the situations where there is room for improvement. The board recognizes that, and coming in as a cornerstone investor, you're not just criticizing from the outside, saying, I'm providing capital, I'm going to roll up my sleeves and work alongside you, but here are the 3 or 4 things that we have to do to make this company better. I don't have all the answers, I'm not always right. But bringing that different lens, that's a lot of fun. So it's not really activism, it's called proactivism, being proactive and trying to make positive change. That's the most fun that I have doing that.
How do you vet the executives you invest in? Do you hire third parties to do background checks? What does your due diligence process look like?
So as you can imagine, I'm walking around the conference as a capital provider for junior resource companies. Not because I'm smart, but I have infinite number of requests because all these companies are capital starved and they want to raise money, right? So I have way more requests than I can fit into my schedule. So a few things that I do, I operate from a network. My first mentor, John Dobson, taught me this. He said, always surround yourself with people that are way smarter than you. 1, it makes you better, and 2, it saves you a lot of time. So I have a network of geos, exploration geologists, production engineers, mine builders, brokers, sell-side analysts, research analysts that feed me high-quality ideas. I still only buy 1 out of 10 ideas that they throw my way. But if it's vetted by someone that I've trusted and worked with for 10, 20 years, already it gives me a higher chance of wanting to engage with that company. So that network effect, if you're coming to see me blind or cold, is unlikely that I'm going to engage with you just because I have so much opportunity to meet companies. So that network effect is key. And then every story has a specific situation, right? So if it's an exploration story, I've been doing this for 25 years. So I've got a good nose for the net, let's say, in the hockey analogy or soccer analogy. I kind of know when an opportunity looks really interesting, but I also know what I don't know. So I'll get that geologic expert to vet it and say, hey, Michael, these are the 4 things you didn't think about. I've looked at this project before, it doesn't have the scale, or the geology gets cut off here, or the grade, peters out after a couple hundred meters, whatever the things may be geologically that would kind of make that project not as exciting as I would think. They keep me out of trouble. And on the mine building side, a lot of companies are walking around with PEAs here, right? And a lot of the PEAs, sorry to be crude, it's toilet paper, right? The quality of the PEA is worth toilet paper, right? It's not well constructed. The cost parameters are not realistic. The mining rates are not realistic. The dilution is not realistic. So I show that to a mine builder and say, look, of these 5 projects that I'm showing you on a PEA level project, which one would you actually build? Which one are really have potential to go all the way? Which one are completely off base? And so that keeps me out of trouble as well. Yeah, so absolutely know what you don't know. Surround yourself with people that are smarter than yourself. I don't do criminal checks, background checks. I think it's reputational. I had a dinner with a very successful CEO the other night, and he said, look, he's mid-50s. He said, look, I've been in this business, I've survived and been very successful because I've never screwed anybody before. Like, you only have one reputation. So if you screw somebody in this business, maybe you make some money in the short term, but you're basically dead after that. Because it's such a small industry, as you know, reputation gets around, you're basically killing your career. So I worry less about that. Yes, you might come across a few people that will lie or misrepresent themselves, and you learn, but those people end up being quickly exited from the business or have a reputation, stay away from them, and therefore they end up self-selecting and keeping you away from this.
But don't you think the gold bull market, like if we're talking about gold, allows for some of the shysters to resurface? Because there's a lot of fast money that won't do the due diligence you're talking about.
And that's where my network comes in. And then those people haven't, a lot of those shysters have gone to crypto. That's where the fast money is.
They'll come back to gold though.
The other millions of meme coins you have out there, they're all selling meme, but they'll come back to gold. Exactly. So that's why you have to have a level of knowledge and expertise and vetting to keep you away from those people. And I think doing this a long time, you become a bit like an FBI profiler. You can smell it from a mile away. After you do thousands of meetings, you can smell, at least I can smell authenticity usually. I can smell disgenuine behavior or promotional behavior. Look at the cap structure. Are they piling themselves with free penny paper and free stock? Are they actually writing checks? So there's certain tells that you can learn to read people hopefully over time. Doesn't guarantee that you're not going to still make mistakes. But yeah, you're right. As the market gets hotter and hotter, you'll have more and more cast of characters coming back. And that's where doing your homework really matters.
Okay, so if I recall accurately from our previous conversations, you just said 1 out of 10 might make it into your portfolio of the deal flow
that I actually look at.
That you actually look at, and those are from people that know you, right? So it's not even a broader pool. Yeah. Then of that, like 5 out of 20 might actually become a mine or something of value to where you take the tech approach, the venture capital, where you take your best shots on goal. Yeah. But only maybe 1/4 of them are going to really give you a home run.
Yeah, I mean, the way I look at it is I invest, right now I'm investing about 25 to 30 junior resource companies. My initial investment will be about 1% of my portfolio. I would be targeting a 5 to 20% position in that company. So I'm getting in early stage, taking more risk obviously to do that. And out of 25 to 30 companies, if I can get 3, 4, or 5 that go all the way to a mine, that's a really good success rate. That's like a 15, 20% success rate. If you had 1,000 companies on a dartboard, maybe 5 or 10 or 20 would actually become mine. So the success rate is very, very low in this industry. I'm talking about going all the way to production. So yeah, by doing hundreds of meetings and only saying no 1 out of 10 times, you're vetting a lot of names out of that. And then even like I said, out of those 1 out of 10, maybe 20% or 15% will actually become mine. So it's a very low percentage of the meetings that I do actually end up in my portfolio, and a very small percent of my portfolio will actually become mines. But if you're investing in the venture capital approach, you're getting in early on when the sector is depressed, when valuations are still really attractive. Those are stocks that can go up 30, 50, 100 times your money. And I've had the good fortune to have multiples of those in my career. And so that's what encourages you to keep going through the bear markets, through the tough times, keep looking at the thrill of the chase, find that next one that could be that game-changing investment for your portfolio, but understanding that it's a numbers game. You don't just see me doing an interview on YouTube and say, well, Michael owns this, so I'm going to put all my portfolio in one name. Because the odds will tell you that you have a 1 in 2 or 1 in 10 or 1 in 20 chance that actually does go all the way. So you got to be systematic about it. Be thoughtful about deploying capital, be patient. Right? Don't sell the stock when it's up 30% if you think it's going to be a 10 or 20 bagger. A lot of investors do that all the time. They pick their flowers and keep the weeds in the garden, right? So you got to say, this is the one that has potential to go all the way. What's my eventual valuation of this company if they execute? not saying don't take profits, but what's the eventual valuation you could get to, and where am I today? And are they executing properly? Hang on.
So Rick Rule always teaches, if the reason for which you originally bought the stock goes away, you sell. How do you do that if you have such a big position in your case?
In my case, often I can't. So I'm very strict at the beginning. It's a great advice that Rick gives for individual investors that have the ability to trade their portfolios. My second mentor in the business taught me, always write down your thesis. And I'm still old school, I like writing things by hand, but he would say, here are the 5 reasons why I own this stock. And here is where it should go if I'm right about this thesis or the macro backdrop, what's going to happen. And so by having your own handwriting staring you in the face, and you maybe write it in red so you could really see clearly, this is my conclusion. If a year from now you're looking at those 5 conclusions, you're like, that didn't happen, that didn't happen, that didn't happen. Stock's down 50%. You're like, well, I can't sell it now. I've lost 50% of my money, but your thesis is broken, like Rick would say, right? Your thesis is broken. The best thing to do is sell the stock because you're off script now. You no longer have a reason to own it. There's no reason for the stock to go up. Maybe it will, maybe it won't, but you've lost the plot. So I love that thesis. But for me, I don't add. So I'm putting 1% of my portfolio in, the stock's down 50%, it's down to 0.5% of my portfolio. It's basically a rounding error. If the company comes back to me for more money and they haven't executed on the plan that they laid out before me, my answer is going to be no. So they kind of just atrophy my portfolio, where the ones that do well will go from 1% of my portfolio to 3%, with a new private place maybe 5, maybe 10 or 15. And that's the winners start to pay for the losers in that model.
Years ago, I interviewed Rick and I asked him about the questions he asks management when he's vetting it. And since we're here at a conference talking to management, he said he'll do some research. He'll come up with a question in his head to where it would be in the best interest of management to lie to him face to face, and then he sees how they react. Yeah. Do you have any tips like that? What strategies do you employ in face-to-face meetings?
I mean, I have my checklist. These are pretty quick speed dating sessions here, like 20, 25 minutes. So usually I'm looking for the attributes of a company to become a mine one day, right? So it would be grade, it would be scale, any jurisdictional issues that would prevent you from getting your social license or your government license to permit it, would be infrastructure that's already in place, cap structure, is the cap structure upside down, is it full of penny paper or full of stock that's going to be for sale in the near future, management and board ownership, really, really important, right? And then valuation would be sort of like just my quick checklist. Trying to catch someone lying to you. I mean, I get what Rick says. A lot of people lie in this industry, so it's easy to be cynical. I take the quality of those answers and I go do my work to make sure they're true, and I back up the facts. So if I get a PEA or a resource model and I find out that it's dramatically overstated, are they lying or are they overstating, whatever, but they've lost some confidence and have lost some credibility, and therefore I'm pretty quick to say no, because there's so many reasons why you can lose money in this business that if you have any doubt or any sense of a red flag or potential red flag, it's better just to stay away. And so any uncertainty or any concern I'd wait, especially in this kind of market where there's so much opportunity still. You don't have to be that, you have to buy everything. You can really be very selective at what you're looking to do and have great opportunity.
So as a director, what's reasonable compensation for a Canadian junior mining company?
For a CEO?
A director. As a director, let's do CEO and director. What's reasonable compensation? Rule of thumb.
So for director, I'm a director. I love boards where the directors own a lot of stock. So the board, and not everyone has the same financial aptitude, I get it, right? But for me, 0 is the right number to start with. I don't mean that facetiously, right? But I mean, if your board owns a tremendous amount of stock in the company, then the cash compensation they're getting from the board should be so small relative to their equity ownership in the company, it doesn't really matter. I believe paying people for their time is important. But if you see a board where they're paying the directors a very large amount of cash compensation and those directors own 0 shares, that would be a red flag. So why are you on this board? Are you on the board for cash comp, or are you on the board to drive the value of the company forward? So one of my key things I look for is board ownership. Because in a junior mining company, you have a CEO, probably have a CFO, maybe you have a VPX. Maybe those are kind of your 3 full-time employees, and you probably have 7 board members. So your board outnumbers your full-time employees by at least 2 to 1 in most cases. And so if your board members are engaged and putting their shoulder to the wheel to help you raise money, help you work on your economic studies, get involved in the exploration program, well, that is sweat equity that's coming in at no cost G&A to the company. And the only reason why they're going to do that is either they're really, really passionate about that particular field and they're really generous, or they own a lot of equity in the company and they view that their investment of their time is worthwhile to create value for their own investment. So that's why equity ownership at a board level is the proxy. And I would also say for junior mining companies, cash burn is a very important issue. So you want to minimize your cash burn. I would much rather give directors who own stock, give them some more stock options or other equity type compensation to further align them with the shareholders. But I try to keep the cash comp pretty low.
So one of the directors I saw, and I don't know the full context of this, in Arizona Metals sold about $300,000 worth of stock in the last week or so. Any commentary you can provide?
He's stepping off the board. So he's leaving the board. I think it's normal if you're leaving a board. Oftentimes you'll leave a board and you'll go to a new project and you'll need money to fund your new project. I don't know him. I'm on the board of Arizona Metals and no longer an advisor to the company either. So I can't speak to his motivation, but he's off the board. So very normal when you leave a board, you probably sell your shares to fund some other project you're getting involved in. That's my advice. If I want boards to own shares in the companies I'm involved in, if you're getting off the board and getting on a new board, probably you want to invest in that company. If you have a board member sticking around and selling shares can be a concern. But oftentimes there's nuances, right? Or, if you're a young family and you're building your first home, you got to pay off your mortgage, or, you got to send your kids to college. Sometimes you need to sell shares, but always in the context of what's the share position, why is he or she selling? Is it money that she or she actually needs, or are they selling because they think that the stock is in a bad place? But in that case, leaving the board to me is a very reasonable reason to sell.
So you've mentioned how you can change management, but you can't change geology. But would you also agree, at least in part, that the geology or the deposit is only as worth as much in the market as management, because they're the stewards of it? So the market might discount it or things like that. What's your take on that, Michael?
So yeah, you can have poorly articulated stories, poorly promoted stories in a good sense, good promotion, good marketing of your company, bad balance sheet decisions, bad financing decisions that can lead to very depressed valuations. Or you can have the opposite. You could have a decent deposit that is, very well promoted, very well understood by the market, that gets an overvalued situation. So I look for those stories where the stock is really, really cheap, the company valuation is very, very low, and I can identify the reason why. Right? So there are things we can fix. Can we get them more institutional exposure? Can we get them more retail exposure? Can we improve their decisions on financing? Can we take out that large seller who owns 10% of the company, has been selling 10,000 shares a day for 2 years in a row? Can we clean that block out in one spot? Can we bring in some better sponsorship? So, why a stock is cheap is really important. Sometimes you dig in and you go, it's really cheap because the deposit is really flawed and the market doesn't know it, or the management team is so flawed and so entrenched that we'll never get them out of here. You just pass, right? So every situation is different, but I think you can improve things dramatically. That's what I realized when I started investing in the junior resource sector. Was eventually I was going to be a passive investor in 2018, 2019, saying, look, I see huge opportunities. I want to fund your project. And when I looked under the hood, I said, wow, I could be passive and make a decent amount of money, or I can roll up my sleeves, like sweat equity, like I said, and tremendously improve the prospects of these companies' potential returns and future ability to grow into the business they deserve to be. So that's the route I took. Having a lot of fun doing it. It's not always easy, but it's very valuable. You're building business, you're an entrepreneur, you're not just a passive equity holder, but you're actually using your gifts and talents to hopefully enhance the opportunity for all shareholders.
So how do you value that? Do you value that in turn? Where do you get that return on your time and network invested? Is it in the deal you negotiate when you enter into the issuer?
I don't negotiate any deals. I buy equity. So if I have significant investment in a company, say I have $1 million invested in the company.
But maybe would you negotiate the initial investment though, in terms of shares and warrants?
Yeah, typically I come in a private placement. So typically I would be if I find a project that I really like, and I find a valuation that I really like, and I want to put in $1 million of capital into the company, I will negotiate terms in the context of the market. So it's very transparent and fair. So I like investing in public companies because the market dictates the price, and I can choose to provide capital or not at the price that the market is offering. And in return, I will say, well, if I can help you guys double or triple the value of your company, I'm going to make a lot more on that $1 million investment than I can make on any salary or options package you can give me. So I found something I think is extremely valuable. It's misunderstood by the market, and I want to help you achieve your full potential. And so that's the idea. And I think companies, the smart companies, I'm not saying because they should take me on as an investor, but the smart companies will often, if they're smart, take lower stock price, do a financing at a lower level with a quality investor group, then do a financing at a higher level. Investors are going to hold your stock for 3 months and dump it all as soon as the 4-month hold is off. So I try to also think about, is the company thoughtful enough to recognize that their cap table and their cap structure and who they have behind the company matters more than getting extra 5% premium on your financing to what the offer might be on the table. It's strategic capital versus just fast money. And a lot of companies make that mistake as well.
Company you identified early was NorthIsle Copper and Gold. Yep. 10 cents, right, was your entry?
It was 14 cents I got involved.
14
cents and 18 cents. I took a 10% stake in the company.
Okay, and that's been on fire since the PEA. Yep. I don't know if I've seen a junior respond that strongly in the share price to a PA recently. Contrast that with Arizona Metals that I mentioned you're also owner. Can you maybe talk about the differences? Why is one doing so well and why is one kind of laggard and going down?
So I'd say both are really good projects. NorthIsle in particular is probably one of the best PAs I've seen in the last several years. It's got a 3-to-1 or 4-to-1 NPV to capex payback at current metals prices. It's got phenomenal infrastructure in place. They've got a port already in place. They've got power roads in place. They've got an airport in place. They've got a wind farm on their project already. So that this infrastructure that, copper projects had to be very capital intensive, Bill, talking about the billions of dollars. And so they've got probably well over $1 billion, $1.5 billion of infrastructure already in place they don't have to spend any money on. So that dramatically increases your returns. If all you're building is a mill and the mining operation, all the infrastructure already in place, that gives you a very enhanced IRR. So they've got a fantastic economic project in a very important jurisdiction of Vancouver, deep water port access directly to Asia. So in the world of tariffs and trade wars, that's really strategic for Canada as well. And what they've done really, really well, they've got an all-star management team and board, in my view. Sam Lee has done a phenomenal job since coming in. And what he does really well is set objectives and deliver to those objectives. So if you look back to when he joined in 2020, year to year, he communicates very clearly to the market what the company's goals are for this year. They fund the goals, and then they've consistently exceeded those goals every single year. So you build up more and more credibility with investors who want to provide you capital. If you're saying, I'm going to give you $10 million this year as a syndicate of investors, here's how I'm going to spend the money, and here's how I'm going to advance the project, increase the value of the project in the next 12 months. Sam's done a fantastic job. Look at the board. We talked a lot about boards today. They have 2 mining Hall of Famers on their board, right? Dale Corman, Alex Davidson, 2 little mining Hall of Famers on their board. The board is a significant owner of the company, and these guys have built mines all over the world. They've seen a lot of projects. So when people like that get behind a project that are already independently wealthy, where their reputation exceeds any money they can make on this project, they only want to put their names behind projects that they believe could really become a mine, because that's the fun for those guys. It's not the incremental dollar. It's I want to be a part of something that builds generational wealth for Canada and for the country and for them as shareholders of the company. So great project, clear execution, and accountable and heavily aligned board. Again, doesn't guarantee success, but those are 3 really important variables. Arizona Metals is another great project. I think in all transparency, I think they've struggled the last several years to execute the timelines, to one, communicate timelines to the market. Secondly, deliver to those expectations to the market. What's got me encouraged at Arizona Metals is about a year ago, they changed the chairman and changed the CEO. Duncan Middlemas and Jacques Perron, 2 guys who have built mines all over the world, sold companies for billions of dollars, would know how to execute towards from an initial resource to a PEA. So they're kind of putting the building blocks in place. Recent proxy, some more board changes happening as we speak at the AGM coming up in June. So over the last year, I've seen that execution. They have articulated to the market a series of catalysts, including initial resource and PEA. So they're starting to get that mantra of the right people coming in, articulating to the market that here are the timelines we're going to do, here we're going to deliver to. So that's one that could really start to emerge. It's been a very difficult period for the stock. It's gone from 50 cents to $7 back down to about $1.30 Canadian. So it's kind of full up and down.
Is that a macro move, or is there anything internal they can do differently?
I think in the last couple of years, it's been investor disappointment with timelines and execution and deliverables. But again, you can't change geology. The geology is really exciting in Arizona Metals, talking about 50 to 100 meter wide intervals of 2 to 4% copper, 3 to 6 gram gold. Very wide, relatively shallow, nicely mineable intercepts. Excellent upside potential, like NorthIsle, in terms of geological discovery on the property where they're just scratching the surface. So to me, it's really been an execution and a market confidence story. And I think feels like to me we're at the bottom of the sentiment cycle. And I think the geology there is quality enough that this project has a good shot to become a mine. And at this valuation, it deserves more attention. We'll see. Management's got to execute. NorthIsle's executed very, very well, and you can see the fruits of execution. If Arizona Metals can start on the execution path as well, there could be really, really exciting a couple of years ahead for them as well.
The case for gold is clear, but my last question is it silver's time?
So silver, for me, poor man's gold. We've talked a bit about gold in the past. Why gold has been going up? It's been massive central bank buying of physical gold that we have not seen for 50, 60 years. So you're seeing a massive diversification away from US dollar treasuries and US dollars and a direct rotation into physical gold. If you look at the holdings of foreign buyers of treasuries, in 2015, 95% of all the treasury bonds outstanding in the world were owned by foreign governments. Today, 10 years later, it's 75%. So a 20% decrease. It's a substantial decrease while the bonds are increasing in terms of supply. Gold's gone from about 6% of FX reserves on central banks' balance sheets to about 15 to 20% today. So that decrease in treasury holdings versus the increase, it's a direct one-to-one correlation. And before World War II, that was about 70% of holdings of central bank reserves of gold versus 15 to 20% today. So you can see that trend continue to go. So I believe we have multi-years ahead of physical central bank buying as they continue to diversify away from the US dollar. Now, why is silver not working? Central banks cannot buy silver. If you want to buy $600 billion of gold like the Chinese have bought the last couple of years, if you bought that in silver, you need like 10,000 football field sized warehouses to store that much silver. You can't store significant wealth in physical silver if you're a central bank talking about hundreds of billions of dollars. You've got to buy physical gold. So who buys silver? Silver is retail. Silver is mainstream. When this gold diversification away from the US dollar into hard assets goes mainstream, that's when silver will take off. And that's also when our junior resource stocks will take off, because retail are typically the buyers of junior resource stocks. So the gold silver ratio is about 100 to 1 right now. Typically it's like 75 to 80. Why is that? Because we said central banks are buying physical gold. When you see that ratio starting to collapse, that means the gold trade is going mainstream. Silver is a really good proxy for that interest level. I'm starting to sense the percolating interest of the retail and some of my friends that are typically kind of episodic investors in the gold sector.
Driven by fear?
No, I think driven by just increased attention on the sector. Like gold's making new highs every single day. It gets in the newspapers, gets a bit in the news, Also, the market's been tough the last 12 months. So we're basically flat or up a little bit for the year. We had 15-20% correction. So people were buying technology stocks and making money hand over fist without doing much intelligent work, just riding the trend. All of a sudden you lose 20% in a 3-month period. You go, ooh, it gets your risk profile up a little bit. You say, maybe it's not as easy as I thought. Meanwhile, gold stocks are doing really well this year. So you have that FOMO, fear of missing out. Gold's doing well, tech's not doing as well. So it creates some sector rotation. So it's a confluence of factors. But yeah, silver will be a little late to the party. And when it starts rallying, that means this trade's going mainstream. And to me, it's a very, very positive sign for the space. We see silver rallying, that means we're even better days are ahead for the sector.
Good. I know we got to get to our next meeting, but Michael, it was great to see you in person, and thanks for coming on the
My
show.
pleasure. A lot of fun, Bill.
Yeah, thanks.